on the issue of a life cover, which is um which is part of the financial cycle that one has to build. So issues like life cover, they fall on a protection plan. So, but before I emphasize more on the life cover, there are a few things which I want to share regarding the funeral covers, because as Black society, that's where most of the time we struggle when it comes to our funeral covers. So, just few things, and then we skip to the life cover. So, when it comes to funeral covers, they have what they call maximum limit, which is the maximum limit according to the law is 100,000. So what people fail to do when they take funeral covers is to check the underwriter. For an example, different companies can operate while they are submitting under one underwriter. So if these companies, they are submitting one underwriter, when they put all the work, they put it in one container. Let's say for an example, ABSA and FNB, their underwriter is one. So whatever I'm going to do with ABSA, let's say I go to ABSA and take 100,000 funeral cover, and I'm going to ABSA and take 100,000 funeral cover. Already I'm at loss, because I cannot get 200,000 because I've already reached the limit. These guys, they have one underwriter. So what's critical when people go for AMA funeral covers, it's key that they check. You can check on your internet. You can ask those people who are offering these funeral covers. But sometimes, they are there for sales, so they don't care much about you. So it's good for you to check with your internet and check the underwriter, because once it escalates and it passes the 100,000, then you will be at the loss. And sometimes, because we black families, we have we have big families, so it might happen maybe I have 7 siblings. So it's good for us also to be open, and that's where the difficult is, because sometimes as siblings we are not open in terms of communication. I can have a funeral cover for my mother. You also do the same thing as my sister, also do the same thing as my brother, and then discover that all of us have insured one person. And then, as we've insured one person, our funeral covers, they have the same underwriter. So we can't get more than 100,000. Now we are going to forfeit um, the other parts of the investment. So now it's good to blend these things right. But as I've said, in the black society, it becomes more difficult because we are not open about these things. But if you are in those type of families where you're open and honest about everything, it becomes easier, because you can plan and say, since when I can take the life cover, I mean the funeral cover, it's fine. I will see what I'm going to do in order for this. Because sometimes what I've learned about black families, we prepared much for death and do less about the life that we are living. And up until someone dies, there is nothing that we can do to say we are at this route to prepare, maybe to build wealth and do other things. We just care about funerals. That's why even our funerals are so expensive. So there is no need for you to have like a lot of funeral covers. I've seen this especially to guys like teachers and other government employees. Discover that they have a lot of funeral covers, and you ask yourself, why too much funeral covers? Because you're going to pay sometimes a lot of money just to get 10,000, which doesn't make sense. You have, let's say, as a teacher, you have the SATU, they're taking something from your pocket as a funeral cover. You have one with Standard Bank, you have one with FNB, you have one with Clientele. lot of funeral covers, and at the end of the day, you have to understand that funeral covers, they don't have much money. So rather one opt for life cover. So it's good to have it's good to have what is it called, the 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 funeral cover, but don't overdo it. For an example, if you look at these funeral covers, at the end of the day, even if you pay monthly, you still have to top it up. For an example, you can't cover all the funeral expenses with just that cover that you took with the funeral cover. As far as black funerals are, I like a big deal, because you have to deal with stuffs like eating every day up until the burial day, and then on the burial day, then you still need a lot of food because a lot of people who are coming. You have to sometimes you have to top up the coffin, because what they can offer you, maybe based on what you have chosen, maybe you're at that lowest class, you have to top up something there in order for you to get something decent. Like, there are a lot of top ups, and when you look at the money which maybe you thought it will cover, it don't make sense. So for me, I always advise that get one that can give you things like that coffin and the service of keeping your loved one up until the burial day. And then you can have something aside that brings cash if you are in a state where maybe you're a parent, are older, you can't go for a life cover. So you can have something like the funeral cover on the side that can cover stuff like a place where they can keep the loved one, and give a bit of a coffin which you can top it up, and then have something on the side that can also bring cash alone. Because sometimes the mistake that others make is to have a funeral that only offers cash alone. But cash alone won't work, because you also need a place where they can keep the person. So you just balance the two, which is critical. So AVOP does sometimes, I mean, it does where it offers you a space and also a bit of cash, but the cash is too small. So if you see maybe you want to cover bigger expenses, the cheapest in terms of cash, not that one of getting in a coffin and a place to rest. In terms of cash alone, the cheapest is Capitec. So Capitec is cheap. If you are looking for a cash, as I've said, you have to have a backup for both. The one that will give you cash, and the one that will also give you a room to keep your loved one up until the burial day. So it's up to you, and also the situation in which you are dealing with, and the dependence which you are dealing with. But you don't need to have four funeral covers, three funeral covers. It does not make any sense at all. So first thing first, check your situation. Where are you? Who are you covering? So then it will give you a direction on what kind of a funeral cover would you opt for, or what other alternatives can you take regarding the issues of funeral covers. And make sure that you check the underwriter. You have to check who's the underwriter, because some or most of these companies, they share an underwriter. There can be different entities that share same underwriter. You say it is Old Mutual and FNB. You discover that Old Mutual and FNB, they have the same underwriter. So make sure that you check the underwriter, so that you don't skip that threshold of 100,000. You stick to the threshold of 100,000, so that you're not over insured. And the fourth thing is to have clear communication with your loved, I mean, with your siblings, if you have siblings, because that's where the other problem is. Some don't keep quiet and say, I don't want to tell them, so that if my mother or father passed away, I'm going to have something and keep it to myself. So that's where the problem is. So if you are fortunate enough to have people who are open, then you can plan around this thing to say, we can't take, like, we are seven, all of us have funeral covers for one person. No, we'll just see how we're going to arrange it. Just have an arrangement as siblings, and say you can take the funeral cover, and then the six of us, you can say that you contribute something in an emergency fund account, so that if we hit something like this, or you take the funeral cover that offers a place and a coffin, then you take a funeral cover that offers cash. So the two of you, then you'll be liable for this, and then we will contribute something every month to make, not every month, those things are not expensive, maybe just contribute annually to make sure that you cover those costs, and then you know that everything is covered. So if something happens, then you know that you sit down again, and then you use the cash that is on the table, and then do everything right. Because in a day, we as black people have a lot of funeral covers. That's a lot of funeral covers, and those funeral covers at the end of the day, they offer us less, but they take more from us. So one of the big businesses in the black society is funeral covers. So guys who are running the funeral staffs, they're making a lot of money, because if you study the stats, you'll notice that most of the black people, they consume a lot of funeral covers. So please do these things, and make sure that you are aligned in everything. So if you have maybe or two or more funeral covers, just go after the session and check who is the underwriter, and then you will get now a closure whether you are on the right path, or you need to do something. So now, going to life insurance, one thing which I've learned from the other ethnic groups, like your whites and other groups, you discover that some of their money comes from the life insurances, which, as the people, we don't pay much attention to this. We pay much attention to the funeral covers, not the life insurances, which the funeral cover, they are fixed for an event, while the life cover is a driven wheel that can be directed to continue with what you have left over. It can continue to cover expenses. Maybe you passed away while you're still paying your bonds, you're still paying your cars, or you have some business debts, and your children, your kids are still going to school. You can use a wheel like life cover, and can also top up the capital that your kids might need to kickstart whatever they want to start, or to continue with their lives. So we don't consume a lot of life covers as black people. We have funeral covers. If you go to any household, you discover that there is no household without a funeral cover, but we don't use life covers. So the other things that I want us to look, and these things are critical, and we have to pay attention to. So let me just come to this. So we have two types of life insurances. So I will explain into full details when it comes to this issue. So the first one, we have the full underwritten life cover with medicals. So this type of a life cover is, number one, is solid, and is more, it is the one that is always recommended by financial planners. So if you choose this life cover, I don't know which life cover are using, which entity are using. So this type of a life cover that is called full underwritten life cover with medicals. If you choose it, they will take you to their own specialist. You'll go to do things like your blood test and answer detailed health questions, and maybe even see a doctor for medical questions. And because the insurer knows your full medical risk, they are more likely to pay you, or to pay out a claim the time you will submit your claim. So let's say, for instance, one goes for this one of full underwritten life cover with medicals, and then they discover that you have, for an example, you have high blood pressure. So when they find those things, obviously, the life cover, it will be expensive, and they will consider you as a high risk, and they will make it to be more expensive. So if you happen to pass away, they won't have much of questions because already they have assessed you. So this one, to decide how much you're going to contribute every month, it will be based on the results of the medicals. So they don't just decide based on the information that you get and say, do you have this, and say no, do you have that? No, they will assess everything and they get the result from the doctor, and then that maybe have had heart problems, whatever it might be. Then from that space, that's where they decide. So this one that is called full return life cover that comes with medicals is the one that does not have too much problems most of the time, because they know your situation. Hence, they have to scale how much you'll be contributing every month. So, but we have the other one, the second one, which most of the time we opt for it. This one that is called the underwritten life cover with no medicals. So this one, the no medical test, what you do, you get a short questionnaire, and they ask you some questions, this and this and that, then you answer, because they keep the records on their phones. They will keep their records for referral future. So the problem is that if you forget to mention a health issue or even leave out something by mistake, they can refuse to pay out at claim stage, and this is called non-disclosure. So this one, that's where the problem is. Maybe you passed away and then they discover that, okay, this one passed on because he had high blood, or this one passed on because he had heart issues. So that's where the problem is, because you didn't disclose these stuffs. And some of the things you may have them, right, while you're not conscious of them. You were not just living a free life. You don't know that maybe you are struggling with this kind of or sickness, and when they ask you this, you say no, and this, you say no. So it becomes a problem with this one. And the difference between the two is that the first one is likely to be more expensive compared to this one, which is not expensive. This one, usually you will be just sitting or at your office or home. They just ask you questions, and then you answer those questions, and then boom, you're done with everything. There is not too much work in it, but it's critical that you understand that this one comes with a lot of risks. So now it's up to you in terms of how do you trust yourself, or how do you look at things? Because as I've said, the first one will disclose your health issues if you have one. If you don't have, then thank God, because you will still be paying less. But if there are some issues which they have dictated, then they will have to increase your monthly contribution. So it's critical to understand that sometimes a shortcut can lead you to a long run of loss. So then when you decide these things, you have to understand that you have the other one and this other one. So then you have to pick which one. So one of the duties that you do as a financial planner, you don't just decide for people, you give them options and explain how things works, and then they'll take it through the knowledge that you've shared with them. So the other one, it comes with disclosures and full medical. The other one, no medicals, just few questions, you answer them, they keep all the records, and then whatever happens, they will use the same records to assess whether they will approve the claim or not. So one of the things that I love about the life covers is that they have that 50,000 to cover for the cost that you may be needing cash to cover, which they release it before we release the full amount of the claim. And also, it depends on how we have set up the life cover. How did you set up? Did you opt for it to be paid once fully, or you opt for it to be contributed based on the needs, or you say it will be contributed every month? It's up to you. So you decide on that one. So now you look at for an example, the Rockefeller family. The Rockefeller family, one of their principles is that you can't access the wealth which they have built up until you take your life cover. So it's part of the clause in their trust, because they have a family trust which now operates as the family bank. So there have been generations. I think now that they're in their seventh seventh generation, if I'm not mistaken, but they still kept the wealth, and the wealth continued to grow. So they control the global wealth, and they have strong influence. So those guys, I mean, the founder, which is Rockefeller, what I love about him is so the need to protect the wealth, to say, if I'm gonna give my kids all these things, it's going to be a disaster. So what I'll do, I'll build a trust, which the trust is going to protect all the stuff. So you don't have full access. And these are some of the things that we also fail as Black people. We don't know how to protect, or sometimes we ignore to protect. We do the building, because now most of the Black people are being conscious of the issue of money and wealth building. So we build, and forget to do the protection. So building is not the end of everything. There is a need also to do the protection. And then the question will be, how are you planning to protect the wealth so that the wealth won't be forfeited in the first generation, but it will be carried from one generation to another generation? So these are some of the conversation now that you need to have with your own lawyer. You sit down and then you talk about these things, and we should normalize such things. We should normalize such things where we don't go to our lawyers when, or our advocate, whenever we have problems, but we must normalize to set up just a meeting to talk about such things. And it should be something that you don't do occasional, but you do it now and then, to say, okay, now I'm at this level. Last year or 2 years back, I was worth this, but now I'm worth this. What are the other side of the law that I need to understand in order to protect this? So you share and you continue to blend. So it's critical. It's critical to have someone who understands these things, and to have someone who deals with law, because one of the mistakes that we make is that we keep the same people as we are, and that's where we miss a lot of things. So in a cycle, you need also to have such guys where you talk law, you don't talk just financial literacy, you talk law. So that will help you to protect this. So you'll have your own structure there. You will have your own structure, and build it according to your own expectations. One of my friends and seniors at SARS, she, unfortunately, you guys, you were not here when she came on our platform in January. She's one of the powerful people that I've ever met who understand estate planning. She's not a lawyer, but she deals with tech stuffs. She works at SARS. One of the brilliant brains that I've ever met that deals with estate planning. So the unfortunate part, she's way limited in terms of interacting with the public. So that's why when she comes to the platform, we find ways to keep it within our own cycle, because she have a lot of limitations according to the oath that she took when she took that office. So, but she's one of the brilliant ones that I know. So yesterday she also sent me a text and saying Friday she will be going to the Reserve Bank. She's invited to the Reserve Bank to teach about estate planning. So that's why I said we need such people in our cycle, that we sit down to say, here is my state currently. Which moves do I need to make to protect this? Because at the end of the day, it should not be about building. There must be also the protection plan. And the question is, what is a protection plan? And the protection plan is not only just to protect the wealth against your kids, also to protect your wealth, because as Black families, sometimes we are entitled. Um, I can pass away, and then suddenly my brother comes and say, uh, those two taxes that are in this space are mine. And then my young brother also come and said, those two properties in that side are mine. Like, they want to devour everything. So you need to have a protection plan. And all of us who are Black people there, we know that sometimes our culture also gives a certain loophole for abuse. So sometimes they can come in the name of culture, and now maybe have left your stuffs. You didn't have a protection plan, you have a wife and kids, discover that they don't have that much power. The voices with the siblings and say, these are our brother stuffs. when I just came here, this is our brother's place, all those things. So you need to have a protection plan, have a proper protection plan. So the protection plan must also be broad. Hence, I say it might happen that I saw this side only, or when I'm sitting with the person who understands law, the person can also bring other views that I didn't pay much attention to that can affect what I'm building. So normalize to have that in a cycle. Have a person who deals with finance and keep that person in your corner. Have that person who deals with law and have that person in your corner. Have these different types of people. So today I was also sitting with my lawyer, and having normal conversations. And then I shared my plans about where I'm going and everything. And now and then we talk. Now and then we talk. So I always understand this. I saw bra Oscar, you're reading one of the powerful books that I love, the 48 laws of power. That's one of the best books that I love in terms of philosophy. So you read some of those laws, you understand that when you deal with life, you have to be conscious of everything around you. So that's why when you go to the battle, as Churchill who said, when you are given, if you can give me an hour to cut off a tree, I can spend 80% of that hour preparing my axe and then 20% to cut it off. Meaning preparation is greater than the work itself. So, but for me to prepare, I need to get my cycle right. So it's key that, guys, let's get our cycle right and put the right people on our cycle that are going to assist us. And later they can even assist our kids to carry on with whatever we have built. So once I said, make it your own priority that we have different setups that plays a major role in your wealth building. So let's check some of the mistakes which many people are making when it comes to choosing life covers. Let me just flip these notes and bring other notes here. Okay. Okay. So the first mistake which I spoke about is the issue of now getting yourself into that non-disclosure life cover without weighing other options. So this one I'll have to skip it because I've already spoke about. I have to check the second mistake. The second mistake is nominating minor beneficiaries, which is a problem. So when you nominate minor beneficiaries, these guys cannot access um these guys cannot access that life cover up until they are 18. So it becomes a problem. So when you nominate these beneficiaries, one of the question is, what is it that you want to achieve if you nominate these beneficiaries? Will they be matured enough to carry on? Let's say I nominate my child, and then the life cover itself is worth 80 million. And it's a question like, will he be able to carry the capacity of handling 30 million? And that's why I said others they prefer not to give you the total amount. They have a strategy to say this person will only access, because let's say it's 30 million. So what I do, instead of saying give this person the 30 million, I said I draw a trust or and said if I passed on, take the whole 30 million and then invest it in an investment that can bring at least about 8% return or 9% or 10% return. And then this person will only be able to access not the principal investment, but to access the return on investment, which is the capital gain. So this person will live by the capital gain of the investment because 30 million will yield a lot of money for him to be able to live. And then the other thing, this person cannot access this life cover unless this person is also having his own life cover. So his own life cover must also contribute back to that trust. In other words, when he dies, his kids are going to access the principal amount which I've invested, and also his principal amount going back now working together. So from generation to generation, this thing can be passed down. But it's all about what is it that you are planning. And there is something which I've left. I have to flip back to the previous notes, which is a mistake which my mom did back in the days when I was still doing primary. Yeah, I was still doing elementary level, because government employees, when one goes for something, all of them they go for it. Let me just flip back to those notes and then I'll come back to these mistakes. Just want to share the mistake that she did. Wait, I don't know. Okay, yeah, the notes. Okay, so we have these two types of life major life insurance. We have the term life insurance. So the term life insurance covers you for a fixed period. So a term life insurance is start from 10 years, 20 years up until maximum date. So minimum 10, maximum date. And this one, it can only pays out if you die during the term. So if you outlive the time and your coverage ends, the beneficiary won't receive anything. It won't receive anything from the insurance company. So the term life insurance is cheaper than the whole life insurance. So it's easier to understand. You can use this cover to cover children until they reach a certain age. So what my mom did, because she was clueless about these issues of life covers, she took a term life insurance with Old Mutual. So when as I have said it, that it can only place if a person die within that period. So she took this term life insurance, and then the fortunate part, she didn't die. Even today, she's still alive. So she forfeits all those invest the money that she was investing. I think she invested not 18 years, because um I have two siblings before me. I'm the third one. So she had all of us covered. And look, I am the youngest. So each and every time one reaches 21, it was a done deal. Next one, 21, it was a done deal. So just count the years that she paid. So it was something that no one knew. Obviously, you only knew that, okay, this person not even having a life cover, if this person can pass on, there is a certain investment that she's having at Old Mutual. I can go there and access it. And the fortunate part, she didn't pass away, so the money is lost. So the question will be, if you choose a term life insurance, what is your ultimate goal? And as I've said, those guys who are selling these things, their only aim is to make profit. They don't care about you. So I think when they took these things, maybe they came to their workplace. Government place, most of the time they have these so-called financial advisors that are coming to their workplace, and then they sell these things and then they jump into them. So I doubt she understood the full concept of this thing. So all that money went to drain. All that money went to drain. So, and she had other investments with All Mutual, which those investments, they were not also making sense at all. So the term life insurance, it works based on terms, the agreed term that you agreed with them, that it's only for this 20 years, only for this 10 years, or this 30 years. So then when the period ends and then no one passed on, then there is nothing which the beneficiaries are going to get, even if you passed away. So the whole life insurance, this one is the one that is permanent. So it comes with a lifelong coverage. So it offers a fixed death benefit. Most of the whole life insurance policies pay out dividends that can be used to reduce the premium payment or be added as a cash value. It's up to you what you want. And then the whole life insurance is more expensive compared to the term life insurance. So life cover is much cheaper when you are young, when you don't smoke, and engage in high-risk activities and work less risk professions. That's why they'll be asking these questions like your profession. People like your police officers, your soldiers, your firefighters, and other classes. They are classified as high-risk people. So if they are high-risk people, that's why their life cover becomes so expensive. And also the advantage of not smoking and also engaging in high-risk activities. So there are some activities that we do, and those activities at the end of the day they cost us. So hence it's also critical to advise young people to say take life cover while they're still young, because the younger you are, the cheaper it is. But when you are old, these things are so expensive. So it's good for them to start early to have this life cover so that they'll be paying less rather than to pay more when they are old. So please make sure that when you choose a life cover, choose a whole life insurance. Don't just take a term life insurance, because the question will be, what is it that you want to achieve with term life insurance? Because if that terms reaches and then you didn't pass away, then you forfeit all the contributions that you were making from that investment. And that's an unfortunate part of things. So now let's go back again to that mistake that I was talking about, because I wanted to reflect this mistake that my mom did, and it cost her that money. It was worth it than to be wasted, but we lost it and we can't redeem it because it was a term life insurance. There's nothing that we can do. So okay, going back again. Um, okay. So nominating a minor beneficiary, but not only nominating a minor beneficiary, the other thing, nominating an older beneficiary. So when I say older, I'm talking about maybe nominating your father or your mother, that maybe your mother by this years around 70, 75. Do you think that person will be capable enough to carry on the duties that are required when you have to take over? And okay, I don't know, guys. I don't know from my side. I will have this conversation with you individually just to hear your views of what are the factors do you consider when you choose a beneficiary? What are the factors that you personally consider when you choose a beneficiary? Same thing, like there are some factors that one need to consider when he or she chooses a life cover. But on this one, it's a question of if you pick, or when you pick, it's not even an if, when you pick a beneficiary, what are the factors that you pay attention to? Because some of these things can make sense now, but discover later on they don't make sense. Hence, also adjustment can be done in terms of how we set up things from the beginning. Because later on I can say, now my mother is old, I can't keep my mother there. Let me get someone who's still fresh, who can take care of this. But who's that someone? And what are the factors which I'm considering? Because sometimes it's easier when you're to say, Philly, who will be a beneficiary just right. So who will be the executor of your estate just right. So it's a question of who do you who do you nominate? And what are the factors that you personally consider when you nominate that person? Because you have to have your facts right when you choose a certain person to carry over in what you'll be leaving behind. So don't nominate minor beneficiaries. And if you're going to nominate your kids in terms of your life covers, as far as I know, life covers, they have huge lump sums when it comes to payout. So you have to have your facts right. It's okay. Sometimes build relationships, as I've said, build relationship with lawyers that can be assisting your children if you're going to have your children there. Or if you get a lawyer who will be assisting your parents if your parents are the one who will be in charge of your estate, including your life covers. So get a lawyer who will be assisting, and sometimes the lawyer can also refer you to some strategies which you can use that can better the situation. So the third mistake which we likely to consider when is the financial planning failure, an adequate cover qualification. So for an example, when you choose a life cover, you need to have your facts right. So you are choosing a life cover that is going to take care of the things that you used to take care of. A person can say, I just want a 1 million life cover because 1 million seems to be appealing in his mind. But the question is, what is it? You have to answer this question. What is it that you want to achieve with this life cover before you choose any life cover? But most of the people will ask you which one is the best life cover. Nothing is best. The one that is best is the one that meets your needs. So you need to know and analyze all your needs. So you have to check. You have to check these things, and if you are doing it with your financial planner, this thing is going to be structured based on the needs on the table, and then the life cover will serve as the method to meet those needs. So maybe you still have kids who still want to go to varsity. You think of a life cover that for them to go to school, I can use the life cover. Maybe you have some properties that you are still paying, whether they are business or they are residential. Okay, I'm still paying these things. If I can die now, I can also use my life cover. I can also cover that thing, but I can also use my life cover. It's up to you which one you want to use. So I'm still paying my car. Okay, if I'm still paying my car, if I want these guys to keep the car, then they can use my life cover. So we have to decide these based on your needs. So your needs will definitely guide you, because sometimes you just love that thing. Oh, if I can get a 2 million life cover, or 2 million will be too much. You say, but look at what's on the table. So if you have more on the table that is not yet settled, then you need to have a life cover that is big enough to cover those things, so that your beneficiaries, they don't forfeit what you have built. So don't just choose with your head. You just wake up and say, I can go for this one of 4 million. I can go for this one of 2 million. You have to analyze your needs on the table, that in case if something happens to me, then the life cover will serve as a protect. That's why it falls under protection plan. So the life cover can protect all these things that I'm having on the table. Then your beneficiaries should not worry about anything. They'll continue their lives while the life cover is taking care of those things. So choose a life cover that is suitable for your needs, not a life cover that is suitable for your colleague or anyone who can refer you to that life cover. So okay, I've spoken with this one of nominating an elder family member to hold money for their kids, because it's a question. That's why it's good to have a will and also to have your estate right plan. Like sometimes you have to revisit your will, because most of this will discover that they have been written long time ago, and there are some of the things which they've already changed. So visit it and make sure that if there's some adjustment to be done, make those adjustments and keep it up to date. So just want to go through the last message, and then yeah, we'll be done for tonight. So the last mistake is failing to integrate life cover into estate plan. This is wealth protection I'm talking about. So this one is all about treating the life cover policy as a standalone liquidity solution and disconnected from the overall strategy articulated in a valid will and comprehensive estate plan. So this failure generates administrative chaos, increases estate cost, and exposes the legacy to unnecessary creditor risk. So yeah, for me, I'm not saying do it, but for me, a life cover should also be one of the things that can add value to your estate, and then it should be protected. Than to we know we are black people, all of us who are here. We know the stories that we have seen from our townships and from the villages, that these kids, hey, they got their father's money, but look who are there. Look at their state today. Hey, they had a lot of money. They used to brag, you know. You work so hard every day, you put all efforts every day, and for someone now to go and take your money and squander it easily, buying alcohol left and right, spoiling everyone, but they don't know the sacrifices which you have made. So then the question will be, what is it that you're going, what will be a strategy in terms of making sure that this money is not just given so easily? They can have access to what you've built, but you need to have those boundaries which are built to protect it, so that whatever you have built, it can also goes through from one generation to another generation. It's all about you building right pillars to protect your own estate. So as I've said, most of the people, they prefer to have trust where they can run these things that they are having been protected in a trust, and then easy to pass on from one generation to another generation. So have these things right and then plan them rightly. So yeah, let's pause here for tonight. We are going to meet next week. I don't know if there is anyone with a question, then you can ask the question and then I'll answer.